All right, good morning, everyone. This is Taylor, and I'm live on YouTube, Twitter, in the room formerly known as the Free Trading Room, now the Essential Breakout Room. So I think I'm officially the first ever session in the Essentials Room. It's a lot of pressure, guys. But all right, y'all, good to have you here. So I want to give you a mix of, we'll call it bigger picture, and then the here and the now. And as we all know, the market is waiting on some pretty big earnings this week. But real quickly, so as far as bigger picture, I think there's some potential here the market goes a lot higher. Not necessarily in a straight line. But the thing I continue to see here is this giant monthly squeeze. And the structure, the momentum inside the squeeze, everything continues to lean pretty bullish. And as far as, for those of you familiar with the Big Three indicator, we're pretty much right on the verge of getting a monthly buy signal. So I'm going to look at that monthly squeeze the same way I would look at a 15-minute squeeze, a 30-minute squeeze, an hourly squeeze. If I have a squeeze and the structure is bullish, momentum is bullish, the indicator at some point flips bullish, I've got to think that squeeze is going to fire to the upside. So I think there's a potential here for, with some patience, that squeeze taking us to the highs, and I think through the highs. And that's that lotto trade we opened up, I think, about a month or 2 months ago. For those of you in the gold room and the mastery. Deep out the money calls on the SPY for December quarterly expiration. All right, so that's bigger picture. If you look at the monthly chart of the NQ, the monthly chart here of the NQ gets the first fresh buy signal since March of 2022. Granted, things are a little extended here, but to me, what the buy signal points towards is you're looking to buy the next flush. Structure is aligned, momentum is aligned. Now you're looking for some action like you had back here, where your consolidations, your pullbacks, they're backed up by that buy signal. So that's a positive. If you look at the equal weighted index, the RSP, to kind of remove the influence of the big tech stocks, this has a nice monthly squeeze. And obviously the tech stocks, the semiconductor stocks, the AI stocks, they're kind of at the forefront of the move right now. What the RSP shows you here is that everything to an extent is starting to participate. Now you're seeing healthcare improve, you're seeing energy improve, financials, industrials, consumer staples. So there's a few nice monthly charts that for now, if I was going to look at them the same way I would look at a 30-minute squeeze, everything leans pretty bullish here. Now check out these apples. So Apple here, since the IPO, has only printed a monthly squeeze or the monthly buy signal on 3 occasions. First occasion was back here in 2017. That squeeze took Apple from, we'll call it $30, and by the time the squeeze kind of fizzled out, the stock pretty much doubled. Squeeze fired around $30. He hit a high of $60. So that was the first monthly bull squeeze. The second one was back here in late 2019, which of course was the COVID rally. I think you can call that an anomaly. That monthly squeeze took Apple from, we'll call it $50 to about 150 by the time it was all kind of coming to an end. And now here's your third ever monthly bull squeeze. So again, if we're looking at this like we're looking at a daily chart, you've got trend, you've got structure, you've got momentum, you've got the squeeze, and you've got the buy signal. And as of yesterday's first, now we've got a fresh monthly bar. So subject to change here with earnings, but at least as of yesterday, the squeeze here on Apple does officially fire to the upside. From there, I think you're looking for 220-ish. That's a target that I would work here out of the squeeze. Now, selfishly, and I say selfishly because a few of you might be long Apple, I would love to play for the push to 220 after just one more decent pullback. I'm not going to be too greedy here, but just something to kind of shake the tree, get those calls a little bit cheaper. If we're trying to sell some puts, let's get the puts a little bit plumper. But on any kind of flush here, and maybe earnings gives you the flush, I want to get positioned for that monthly squeeze to take price towards 220. So long as the signal here is still valid. And then it's the same kind of thought process, bigger picture for the S&Ps. So long as we have the monthly squeeze, and especially if this month or maybe next month we get a monthly buy signal, I'm looking to buy any pullback to then try to see it into higher prices. On my indicator, the current target here out of this monthly squeeze, if it does fire to the upside, 5,000 buckaroos. Nice big sexy target. All right, so there's bigger picture. The here and the now. Everything's just a little bit quiet, which I guess to an extent to be expected. Apple earnings, Amazon earnings. What I'm seeing here, at least on the chart of the futures, again, are signs that things are just kind of quiet. So the buy signal here on the daily chart, as of this morning, that goes neutral. And then your lower time frames. The daily chart is neutral. The 4-hour chart is neutral. 30-minute, 15-minute, 5-minute. So there's no huge red flags here. We're not taking out the 21 EMA with a bunch of sell signals. But in other words, it might be the end of the move for just a little bit. Squeeze fired. Gave you a great push. And now you're kind of working back to the buy zone. And now, if anything, we trade sideways for a bit. And then maybe we get a brand new squeeze. I think that'd be pretty nice. So just, I think if anything, tighten things up a little bit. Trading squeezes, buying the dip, doing a lot of bullish things. They all kind of tend to work really well when the market itself just fired a squeeze. S&P's fire a squeeze. For a couple of weeks there, you can kind of buy anything. And the market's giving you the wind at your back. Same thing back here. Had a nice squeeze back there in late May, early June. That gives you a few weeks to work your bullish playbook. A lot of things that work well when the S&Ps are giving you basically the green light. When we pull back to the 21, when things may be going to, just a little bit more choppy, a lot of the things that work back here and the things that work back here, they can get a little bit more difficult. So, I think a few things you can do is just tighten things up a bit. Maybe get a bit more strict as far as your stock selection. Really try to save the ammunition for the A+ setups. Maybe you're a little bit quicker to take profits, and then maybe you're a little quicker to cut the losses. And then if a couple weeks from now there's a brand new squeeze fires to the upside, then I think you look to get a bit more aggressive. Alrighty, so for a few picks here, at the moment we're long ADI and X, which is US Steel. So we'll check this one out first. And the first thing we'll check here are the buy and the sell signals. Path of least resistance, and everything's pretty bullish. Buy signals on the daily chart through the 30-minute, and a green bean on the 5-minute. So that tells us momentum, structure, all that good stuff shaping up for a push higher. Now the goal is we take these signals and then match them up with a squeeze. So then if we do the squeeze check, green means a squeeze and a buy signal. So we got that good stuff on the monthly chart, the 2-day chart, the daily chart, the 30-minute, and the 5-minute. That's my favorite trade in the world, guys. The marriage of the squeeze, and then the signals telling you the path of least resistance. It's a beautiful union. So we bought some calls here yesterday, and the target out of the squeeze here is about 26.50. Where this could turn to something a little bigger than 26.50. And keep in mind, like I just mentioned, if the market's going to be a little choppier here, trying to catch the push into the target, take the profits, then move on to the next one. When the S&Ps and the Qs fire their own squeezes, then I think you're looking for potentially a little bit more. But where this could turn into a pretty nice move is you have the nested squeeze setup. So the daily squeeze with the buy signal, that's printing inside of the 2-day squeeze with a buy signal. That's printing inside of the 3-day squeeze. I'm sorry, no 3-day squeeze. Those are printing inside of the weekly squeeze, which is pretty close to getting its own buy signal. And then even on the monthly chart, squeeze and a buy signal. So what that can trigger is the domino effect. The daily squeeze fires. Then it triggers a 2-day squeeze to fire, so on and so on. For now, we're looking for 26.50-ish, but I think beyond that, one to keep an eye on. And then the other name we're long here is ADI. So check the signals. Everything's pretty bullish. Check the squeezes. Daily squeeze just fired. We have a squeeze and a buy signal on the monthly, the weekly, the 3-day, and the 2-day. So first the daily squeeze fires. That might get the 2-day to pop off. That might get the 3-day to pop off. My favorite example of that kind of setup as of late is Netflix from back here in early May. We bought it right there. So on May 17th, Netflix here had a squeeze and a buy signal on the weekly chart, the 3-day chart, the 2-day chart, the daily chart, the 4-hour, the 2-hour, and the 1-hour. That domino effect of one squeeze firing and then the next, that took this puppy from 330-ish to 480. So I think that should always catch your eye if you can find where you have those squeezes stacked on top of each other, like a US steel or an ADI. So for ADI here, we're looking for 205-ish, 206-ish. Then for a few more picks here, guys, I'll take you through them real quick, and then I'll open it up for some Q&A here. AI looks pretty solid. The daily squeeze doesn't print a buy signal just yet. Where you can kind of compensate for that is if everything inside the daily squeeze is printing the buy signal. So AI looks pretty solid here. One that we traded last week. And I'm going to warn you, this one's a little spastic. So if you don't like trading stocks that might be up 10% at 10 in the morning, and then down 10% at 11 in the morning, you might not want to trade a firm. At least that's been the behavior here for the last few days. But this is a nice setup, though, for sure. Daily squeeze just fired. Still coiled up in a 2-day and a 3-day. So if you like them frisky, a firm might be a good option for you. Next up is Crowd, CRWD. I'm a little bit late here as far as a good entry, or what I would deem to be a great entry. But if I can catch this on some sort of flush, I think this one's got some potential. Daily squeeze just fired long yesterday. Coiled up in a 2-day squeeze, a 3-day squeeze, and a monthly squeeze. Try to catch that one on a pullback. Let's see. Next up is Lucid. And as y'all can see, these are all kind of the same setups, right? Which is the goal. So Lucid's got a couple squeezes setting up. Most notably, 4-hour and the daily squeeze. And then Tech here, BCK. A lot of squeeze action. Monthly chart, the weekly, the 3-day, the 2-day, and the daily. So potentially like a Netflix, things can get pretty explosive from there. So there's a few picks for you guys. I like ADI. I like US Steel. Firm is frisky. AI is looking pretty good. I like Tech. I like Lucid. And then I do like CLF. That one's pretty sharp as well. But yeah, there's my picks. And again, the biggest thing here is just if the market does just take a chill pill for a bit, got to potentially make a few adjustments. Alrighty. But any questions y'all got? Any charts you want to take a look at? Throw them on over. Let me see what you got. So, Jim, that's a really good question. Really good question. So, Jim asked if I would buy, would I buy a dip, or in my case, would I add? Would I add to my ADI trade this morning on a dip? It's a good question. One of those things where the setup itself here on ADI, for now, this thing remains perfect. So as far as the quality of this setup, totally valid to take a fresh entry on a dip, or to add to an existing position on the dip. Before I make a decision like that, what I got to take into consideration, do I still feel like I'm in an environment, right, in the short term, the next 5, 10, 15 days, do I still feel like I'm in the environment where I've just clear as day got the wind at my back? Where the market itself is so strong, and obviously we avoid doing this, but the thinking is, man, the market is so strong, I could kind of just trade anything. To the extent I think that environment might have kind of come to an end for just a little bit, I've got to be conscious of that as far as, not just opening new trades, but also adding more risk to current positions. What I've found is and I think most traders find this, you're going to have your best swing trading, long or short, when the S&Ps are moving and grooving. You can still find winning trades and really nice moves in the stocks, even if the S&Ps are just kind of flatline. But I do think it becomes a slightly different probabilities game. Good question. Good question. So Evelyn, that's also a great question. What about the U.S. credit rating? That's probably a better question for a JC or a Sam. I will always be honest with you guys. My knowledge of that kind of stuff is pretty close to zilch. So my real answer to that, which I think is the only answer that matters, what do the charts tell me? Is the credit rating getting a downgrade a big deal? Well, there's one really easy way for us to find out. Through the price action, through the structure, through the signals. When I look at this morning's action on the S&P futures, doesn't really strike me as anything out of the ordinary. We're kind of hanging out above the 21 EMA. So I do think a good question, and if you can hit Sam in the options room or JC in the options room, I'd actually like to hear their response. But for me, being the caveman that I am, so it's kind of about the charts. But I do like hearing those guys talk about things like that. So it is helpful. It is helpful. Hey, what's up, Russ? What's up, Tom? Amelia, Tommy boy. Thanks for all the greetings, guys. Yeah, Chris, so you should get some news out in a matter of a few days regarding the big three squeeze down here. Especially if you currently have the big three signals, definitely keep an eye on the inbox. Keep an eye on the inbox. Hey TNT, thanks for being here. No, Jim, yeah, totally valid. If ADI opens at 196, 195, 194 today, I still have to like the setup. And if I did want to add to the trade, I much prefer adding to the trade down here. But then I think we do want to step outside of this one setup and then just get a sense for the bigger picture. Where I'm always looking to continue pulling the trigger, but my aggressiveness scale is kind of tied to the indices. So just always be transparent with you guys and realistic. I took that small account in May from 2,500 to like 24,000. I'm telling you right now, I would not have been able to do that. And mind you, that's really aggressive trading as far as position sizing. But even if I had just doubled the account, I couldn't have done that without the S&Ps firing that squeeze. So putting aside the aggressive percentage return, everything just kind of lined up as far as timing. And what I really did was got aggressive when I should get aggressive. I've got beautiful setups over here. And now Mamacita Market herself, picture perfect. For me and my strategy in these indicators, there's no better time to go out there and be aggressive. Pulls back to the 21. Indicator goes neutral. Turns a bit more into a chop fest. I've got to immediately step back and say, all right, T, I'm no longer back here. Doesn't mean stop trading. Doesn't mean stop pulling the trigger. Right? I want to keep on taking good shots here. Just not the same situation. So my position sizing will scale down. My aggressiveness as far as, back here, guys, in that small account, I'm buying a lot of out the money calls because everything's just lined up. If I started an account right now with 2,500 bucks and the S&Ps are just kind of flatline for 1, 2, 3 weeks, I'd probably get my ass handed to me trading those out the money calls. So a long-winded answer, but hopefully that makes sense as far as when do I want to trade my go-to setups aggressively versus when am I just more so trying to keep the ball rolling. And a lot of times it has nothing to do with that one setup itself. All good questions, though. All right, let me see what's going on here on the YouTube and the Twitter. So Javier from Moving Averages, and good morning. The white moving average is the 21 period EMA, so 21 exponential. Blue moving average is the 50 period simple, and then the red moving average is the 200 simple. So 21 EMA, 50 SMA, and 200 SMA. All right, Chesapeake. Let's take a look at Chesapeake. Yeah, so we had some calls here last week. We had some calls here. And then we weren't quite getting the move we were looking for before earnings. Let me do this real quick. Style, settings. But yeah, anyways, we took our calls off before earnings. And now that earnings is done, everything still looks really, really good here. With the exception of the weekly chart, we've got a buy signal printing on every time frame. And as far as the squeezola, a lot of squeeze action. 1 hour, 4 hour, the daily, and the 2-day. They've all got a squeeze and a buy signal. And then you have a neutral squeeze on the 3-day and the weekly. So this is it's perfect. My only gripe, or not even so much a gripe, just something to keep an eye on. The falling 200 SMA on the the 4-hour chart looks awesome. But the falling 200 SMA on the weekly chart or the daily chart, excuse me, falling 200 on the daily chart, at least on the first attempt, might be a tough level to break through. Maybe they try, they pull back a little bit, and then they push it through. But what I would say is if it breaks through the daily 200 and never goes back below it, then I think you're kind of looking at the green light for this thing to fire all the bigger squeezes. So call it north of $87. Then I think you see your 2-day squeeze, the 3-day. Try to get it popping. So Chesapeake grades out really well for now. William, let's look at some First Solar. My man William. Good call out, man. Yeah, we had seen this one, but we avoided it because of earnings. Now earnings is dunzo. Everything grades out perfectly here. Bull score is a 5 out of 5. The bear score is a big fat 0. And then this label tells us A+ setup. In my book, A+ means we have a squeeze. We have an active buy signal. And it's all setting up right in that buy zone. Yeah, good call out. We got to keep an eye on that today. Now here's the only thing. And maybe TAN can. So TAN is a solar ETF. First Solar, of course, a solar stock. I think it's a question of can TAN actually hold support here? This thing's kind of a disaster, which actually makes First Solar that much more impressive. Like, this is the family it belongs to. This is the household that First Solar is going home to every night. Massive dysfunction. Bunch of sell signals, bunch of squeezes with sell signals. BMPH, another solar stock. That's pretty trash. Suncor. Now, Suncor's not too bad. SPWR. Personally, I would look to trade First Solar. To me, that's a valid setup for now to get long. But I got to do that knowing this isn't the stock in the best looking group. As a comparison, if you look at the material sector, XLB, that beautiful weekly squeeze just fired to the upside. So now all the stocks in that sector, they've got some positive wind at their back. The ETF itself firing the squeeze, by default, kind of a positive influence on all those stocks. So yeah, I think First Solar is valid for a long, but I'm going to do that with the understanding you've got this giant weekly squeeze in the sector ETF. Man, this thing's all kinds of sketch. It's under the 200. And everything kind of points towards, for now, that wants to fire short. Which to me, in plain English, just means if I take a long on First Solar and it starts to misbehave, I'm probably going to be a little quicker to cut it off. I don't want to fall victim to being long a solar stock as the solar ETF just breaks down and pukes. But that is a legit one for now. That is a legit one for now. So Carl, as far as the squeeze that you're seeing here, that's called the Big Three squeeze. That's my modified version of the squeeze. We're gonna have some news out on that here in a few days. In terms of the original squeeze or the Squeeze Pro, if you go on YouTube and just type in my name and then squeeze, I've got a few videos that are 30, 45 minutes long, an hour long. That I think do a really good job of breaking down the original squeeze and the Squeeze Pro. And those are here on the channel, the YouTube channel. All right, guys. I think I'm all caught up on Z questions. Yeah, Tim V, Eric, Eric, the indicator wizard, cleaned things up a bit. So now 5 out of 5 is the best they can get. Okay, Tony, good to know. I'll check that out. Hey, good morning, Richard. First off, welcome aboard. I'm new here and looking for advice to which indicators you would recommend starting with. As far as free indicators, and I think there's some free indicators that you can build a really good foundation around. I've got all these flashy colors and these arrows. I got to this point from building a foundation around the squeeze, the original squeeze. So on most platforms, you can find the TTM squeeze. Then I think you throw the 3 moving averages on your chart, 21 period EMA, 50 period SMA, and then the 200 SMA. And then I think initially a really good thing to study is the relationship between the squeeze and price either being above or below that 21 EMA. That's kind of like a really basic level way to look at the squeeze. But I think from there you can build a good foundation where what the squeeze gives you is that moment in time where the stock has reached a point of compression. Stock is catching a breather, gearing up energy for its next nice move. Right, the mystery of the squeeze is which way is it going to go? Big move to the upside, big move to the downside. So I would start your focus with the squeeze on looking for stocks in a squeeze, trading above the 21 EMA to eventually fire to the upside. That gives you a level to anchor to. Right, that becomes your launching pad, your over-under level. And then the squeeze becomes your timing component. All right, I found a squeeze. That tells me the market's gearing up to do something big. If we're under the 21 EMA, we're under the 50 SMA, it's probably going to fire short. Then you start to add in other things from there. I like MACD for momentum. I like some moving average crosses. But one thing you need as a trader, whether you're going to trade stocks, futures, whatever the case may be, is you need to find that time where I can either get long or short, and ideally, as quickly as possible, get pushed into a profit. That helps you grow your account quickly. That also helps you take, you're getting more at-bats. So I would start there. Go on YouTube, look at some squeeze content. There's some good stuff on my YouTube channel, some good stuff on the Simpler channel. And then I think, try to catch as many sessions in here as possible from different moderators. See whose approach, see whose shtick kind of resonates. And then maybe look a little bit more into their indicators. So when you catch Henry in here, Henry, I think, is one of the best squeeze traders I've seen. And he likes to incorporate things like the voodoo levels. You're going to probably see Sam in here. Sam's got his high-low indicator, his trend oscillator, and then I've got my big 3 indicators and the squeeze. But I think as far as the community that we've kind of built here, everyone to an extent kind of speaks the language of the squeeze. So as far as what I think is one of the best setups out there, and then kind of getting on the same page and getting in tune with what a lot of us are looking to trade, I think the squeeze is the best place to start. And all right, looks like you guys got the YouTube link there. Awesome. Thank you, man. But all right, y'all, the market is going to open up here in 3 minutes and 20 seconds. So I'm going to let y'all go, but thank you for being here this morning. It's an honor to kick off the first session in the Essentials Room. So hopefully you found it to be a good one. And I look forward to seeing you guys next Monday. So till then, trade well, and I'll talk to you soon. Adios.